Okay, it's Wednesday, October 5th. This is a pre-opening SPY video, about an hour and a half before the open. And you can see here at the moment, our pre-market range is a little bit lower this morning inside of yesterday's green bar. You can see it here after a move up yesterday and the day before. We are now a little bit lower here at the opening, forming whatever high and low forms here. We'll see as always how the opening price action moves either above or below this area and what that may mean for where price is headed next. In terms of the way I look at these, this is the daily chart here, and again the weekly chart and the monthly chart. I'm kind of excited to bring into play a little bit of a fine-tuning approach as to what is really happening next. I discuss over and over how I use the strat and the principles there in terms of two ups and two downs and inside bars and outside bars on a day-to-day basis, and how there's a chain reaction often on the weekly chart. I also have been kind of obsessed watching the ICT videos in terms of a lot of it has to do with futures trading, but it applies to really anything in terms of price action. And I've incorporated some of that analysis as well into these videos, but I kind of see, like I said, a fine-tune approach. I've been looking over many charts, and especially the SPY charts, and going back. And what ICT generally does is they are looking at two main things: either runs on liquidity, meaning, if you have a certain high here and you have a two-up bar, then, that high is a run on liquidity to the upside. Or if we have an obvious down, pivot here and you're moving lower, then you're going to make that run on liquidity. And it also deals with fair value gaps all over the place. And I've been kind of talking about that a lot in terms of even this current move up. I've been talking about how we have a gap in here, and you have different types of gaps. Obviously, you have this what they call a fair value gap between a prior high and low. When the market makes kind of an inefficient move down, it usually comes back and wants to fill that in. Then you have gaps like yesterday, which is just a pure gap in between two bars, and that also tends to get filled in. And what I've noticed, and again, I don't want to get into everything right here, but as I kind of analyze the monthly charts, and obviously I talked last month how making a lower low, there was a run on liquidity to down here on that chart. That was obvious. Now there's nothing obvious at the moment where that's going. I don't see an immediate gap. I don't see an immediate run on liquidity. So that's the monthly chart. On the weekly chart, again, that sometimes the monthly aligns with the weekly, and we were having a run on liquidity down here. But now we formed a gap on the way down, and I could show you how, back here there was a gap on the way down as well, and there was a bigger fair value gap between these bars, and that's why in the end that ultimately filled in. So right now, I'll just state it this way, because over time I'll get more detailed about this, how I'm starting to use all of this. So bottom line is, on this weekly chart on the SPY, as I've discussed, I discussed this little gap area here between the low of that bar and the high of this bar that I said we're coming up, and it could be a resistance area, because it could be. But now my bias is more when I see these gaps and a two-up bar on the weekly chart, I think we're going to fill that in. Okay, and so I still think we're heading up. I drew a green line here. You can see it. If I look at the daily chart, the green line's up here. I think that weekly chart's going to be filled in on the upside. Now, on the daily bar, at that point, you kind of look at the daily price action, the highs and lows, and any gaps and pivots that are on this chart. And what I see here is a gap at the bottom. So I actually think this is going to be filled in as well, even though I'm expecting it to go up to the high of the green bar. So what does that all mean? And this is this is a unique situation at the moment, because we actually came up, and once I saw that gap up here, to start the week, and I kind of saw a two-up bar here yesterday, that's where I also saw that we were going to, have a liquidity run up at this pivot. So that was yesterday's kind of thinking. Now today, number one, if we move up from this bar for 3 days in a row is a little bit of short-term exhaustion risk, then yeah, I think we're heading up there to fill in that weekly gap. But if we have a down move today out of the gates, I also think on the very short term, we're going to be filling this gap in. So therefore, I'm very comfortable getting short today with a red opening to head lower and fill that gap. I then, just given that until this weekly chart turns 2 down, I'm expecting it to eventually head up here and fill this gap. And again, I can go back. There was a great example in here how we filled the gap on the upside, and then we had a bigger fair value gap above, which you can see ultimately got filled. But on the daily chart, if I go back to that area, you can see here, once we filled that daily gap, daily gap in here, then we had a 2 down bar, and we had a little gap in here on the daily chart to fill, so we went down. Then once that was filled and we went 2 up, you can see we had a gap here to fill that we moved up. And then as we had a 2 down bar, we had a kind of a pivot run. This is a pivot machine gun. So we came down and took out liquidity down here. Then we started up, and once we started up again, we had a liquidity run up here, or a pivot machine gun to a liquidity run. Then once we broke that out, all of a sudden we were now filling in not only this small gap, but this big gap in here. So I was, all week long, I was watching the daily chart, knowing we were kind of likely filling in this gap. And that once you get up here, you're then making a liquidity run up there. So it goes back and forth all over the place. I don't want to get too detailed about it, but at the moment, I'm very comfortable on a down move that we're, play the red bar just to fill in this gap. And I'm still, until this weekly bar changes and fails to, get some kind of 2 down, which we're nowhere near given the way things started and the big move up, I think we're moving up to fill this gap. And then from that point, I'll go on, we'll see, there's a liquidity run up here if certain things develop. But at that point, we might have enough daily action going on where there'll be some other liquidity runs in the shorter term, so that's kind of what I'm getting at. So at the moment, let's just get back to today. I think I'm very comfortable going short to fill in this lower gap in here should we start lower and head lower. Also, within this analysis, there's another element to it that I don't even want to get into now, where not only am I just looking at the opening green bars to maybe buy above a pre-market high or red to sell, but there's also kind of when I have very strong expectations about what I just mentioned, there are moves where you might get a little green to start up, let's say out of this area, and you get a big red bar, and that could be the downward intraday action that aligns with all the stuff I've just mentioned here. So I have another way of kind of looking at the opening price action, even if it's not necessarily the first bar. That where you get big green and red bars, that could be really the sign of what the day, the best trades on the day. But again, it doesn't stray too far for what I normally do, the opening price action and then the first move of the day, second move of the day. That's the thing. A lot of the stuff I look at, the midpoints of these bars and the red and green bars to start the session and how it aligns with the opening bar, it all kind of often aligns with what I'm bringing, what I just described. But I just see a way to fine tune it. So I'll leave it at that for now. So anyway, let's see what happens today. If we start up higher with a big green bar that I'm comfortable, saying this is still an up day, we should take out the high of that bar and or move to the high of yesterday's bar and then see from there how much follow through you get towards what I know I really feel strongly will be a target here. But in the meantime, I'm very comfortable also going short here and filling in this gap to the downside, at least for today. At that point, if we do that, let's say we get some kind of red bar, I'll be excited. I'll be really excited on some kind of then 2 up looking bar on the daily chart to move back to that target, because that's what's going on at the moment. Again, on the weekly chart, filling in this gap is really my primary big picture thought at the moment, even though we can go up or down today after kind of two days to the upside, 2 big days to the upside, we can go up or down short term. So we'll see what happens today, and that's probably too long of a video on this, but it just introduces some things I'm definitely excited about and looking for, and we'll just see how how it all lines up day to day going forward within all these time frames.